Okay, everyone, welcome to Galaxy Stock Market. This is Brandon. Today is September 11, 2024, 911, folks. It's about 12:42 a.m. as I bring you this installment of my earnings picks and something that you ought to be thinking about. And this is what we're talking about, restoration hardware. We have always been targeting restoration hardware as the consumer demand destruction increases. Where people haven't really looked at is that the high-end retail and customers are also being affected. And that means that the Harley Davidsons, the Ferraris, and all the high-end retailers are also suffering as a result of this high inflation and stagnancy in the real estate market. Here is the disclaimer. Pause it, read it. If you agree, please move forward. And then here's my shameless plug on x.com/galaxy.market. Follow us there. There's a lot of great information that we post on a daily basis that you won't get on this YouTube video. And you'll get, a little after our members do. All right. So shout out to Ninja Trader. He asked me about restoration hardware as I was putting out several things about the retail apocalypse and things of that nature. And, this is the kind of things that you can get right now over at X.com. So I basically decided that I will do a video on it. The options prices are pretty pricey, and so that gives me a little bit of a pause, but technically it is a very interesting specimen to look at. Before we delve into that, I wanted to talk about the fact that the Q1, in June, basically they beat some earnings, but they posted some retail earnings losses on both on the EPS as well as on the revenue end, yet because they're not really disclosing that, how their markets are really doing. And if you don't believe me, just go check out how many retail restoration hardware stores are doing during the weekend. It's empty. Okay, I mean, I know that's anecdotal, but it is empty. And nobody's really buying these high-end, expensive furnitures and door fixtures and things like that of that nature in this highly inflationary event. And especially because, real estate market is super stagnant. I mean, homes are not flying off the shelves. And so the interior decorators, if you talk to them, their business is down. Okay. Now, I think this is going to continue, and they're going to continue to miss this EPS. The problem is they get a pass because they're opening up some new stores. And you know what? Anybody can open up stores, but is that a sound thing? And I think really restoration hardware is not actually telling you a lot of the truth about what's going on with their business. Okay, now also the Q2 generally has been a very heavy month for selling in the past. And right now there's some distribution. I know that the CEO bought some in June. And this is, when you look at it, the CEO, Gary Friedman, and he bought, quite a bit of stocks, but this is a stock options expiration. It is not something that he is super bullish on. That's why he's buying. The rest of the cohorts, the insiders and directors and CFOs, have been selling whenever they can. They had the opportunity to do so. So that's kind of what we're looking at. The short interest isn't that bad. There was an article floating around that the options flow is bullish. I don't see that really when I look at it. But I do think this is a good, short play, not necessarily as an earnings, but certainly if you can stomach the high premium price. Premiums are high because they're expecting a big move. Okay, but let's see what that looks like when we look at the consumer demand destruction. Okay, so here is the consumer demand destruction. So what we're looking at here is the daily of the restoration hardware. And, realistically, it's been basically making like a triple top formation. And then obviously we have a declining trend line and we accelerate it down. Some people think that this is the bottoming channel off the bottom band of the Bollinger Band. And certainly it can go into this green line, which is the 8 EMA potentially. And I think that's where it may be headed. But the RSI has been super weak, okay, as it's holding up. There's gaps galore. I mean, if you just look at this as a purely a gap play, it's something that we can be looking at. But this is not a bullish looking chart. Obviously, we topped right about here at the 350, and it's been downtrending significantly. Some people may even say that this is some form of a weird looking head and shoulders, and I see that. You'll see that better on the weekly as I show you. Yes, there is potentially some aspect of the histogram showing some divergences positively, but really it really has been a divergent, fully directional. It's a weak stock when you look at it. CCI has been weak, and there's no real divergence down here, and so that's kind of what we want to look at when we see that. And then let's look at our PPO ADX. Stochastic looks like it might pop up, but it's really been divergent. And so we have this nice PPO ADX in terms of this bearish formation, right? So, I think directionally this will be bearish, even if they pop after earnings. It's something that you might want to look into after the IVs have been come off, right? Accumulation distribution, there's no real sign of real accumulation, right? I mean, we're at the bottom end of the channel. There's really nothing here that shows you institutional buying. It's just been nothing more than just constant selling right down through here. The ATR is basically been coming down, okay, and a cross below or basically bounce above is going to dictate how big the moves are going to be. It's not if the options were cheaper, I'd probably think about maybe if you're up, you should be, front running it. But here's where I really think the bearishness resides. Here's the longer term head and shoulders, right? I mean, basically, we've got that. So if you look at this as a neckline, and we're looking at this, we've already broken through the neckline. We're just chopping around there. That's one scenario. The other scenario is that we have a smaller head and shoulders as they're basically bouncing up, trying to have a counter trend bounce. It really wasn't very successful, right? I mean, we're failing off of all the moving averages on the weekly. And we poked below this primary support line. We're just above there. If the earnings are bad, or if it continues with my consumer demand destruction thesis, yes, this thing will drop. All these arrows, pay attention to these, okay? You can pause it and look at all the levels. Volume has been declining. There's no real signs of institutional buying per se. I would argue that sell volume has been more extensive, even in this declining volume, than the buy volumes, okay? MACD is negatively divergent, and we had a death cross right here. And so, I'm bearish. I'm bearish on the stock over the longer term to intermediate term. As always, earnings are a crapshoot. But if it weren't so expensive for the premiums, I think about taking it on. I may end up doing it. I mean, I did call in our group, just kind of a hedge in case this thing does break down all the way down into this 100-day moving average. Okay, it is possible. Okay, I just can't figure out how this company makes the money that it does. But the PPO ADX on the weekly is, doubly negative. We're both having this negative PPO ADX crush indicator formation. There's no accumulation. In fact, the decline or the selling distribution is increasing almost exponentially right here, and we're at the bottom end of this ATR. So any type of break below this trend line, that would be negative. But I think we're going to start breaking up above here and then increase the average true range of the move, and that's why I like this stock. Okay, so that's kind of what I have, folks. If you don't believe me, hashtag consumer demand destruction. That is exactly what's going on right now. Okay, we got recession coming. Who's going to spend money when the real estate is coming down? Everybody's celebrating the potential, the Fed rate cuts. Guys, historically, Fed cuts rates after they create the recession, after they blow a bubble and they panic cut, but I think they do it on purpose. So high-end retail apocalypse is coming. All right, keys to RH trade. It's basically an alarming sign that wealthy and upper level consumers are also being tapped out and they're spending less because the real estate market sucks right now. Restoration Hardware enters seasonally weak period, so that's one thing going for if you're thinking about shorting it. I just don't see this as a bullish chart. Short the rips, head and shoulder on multiple frames on weekly and daily. Recession, consumer demand destruction, and marriage decline. Right? Because people buy expensive shit when they get married or thinking about getting married. It's just they're just not doing that. No one is thinking about starting families, and that's an alarming trend. Follow me at Galaxy Doc Market. Okay, I appreciate the follow. Like us, share us on YouTube, and above all, comment, good and bad. Please share my videos. It's good. I mean, I put a lot of effort into it, and subscribe. And if you want to learn more about working with me, okay, email me, okay, and find out how you can become a member. Okay, I have exclusive memberships that basically everybody likes being part of. Anyways, good luck with everything. Be careful out there, but Restoration Hardware, I think it's bearish. If you can stomach paying higher premium, I think there may be an opportunity to front run it, but this stock sometimes can pop and then drop. So remember that. All right, see you later.